All right, so this is where we last left off is we completed our daily sales for the 27th of June. So now we are finally on the last day of the week of week 4, June 28th, Friday. Okay? So this says here that we end up receiving a payment from Great Restaurant for invoice number 104 with a check number 4512. Okay, so we end up receiving a check from Great Restaurant for invoice number 104, check number 4512. Okay, it doesn't tell you how much it is, but that's okay. Let's take a look at what we received. Okay, or let's see how much that invoice was for. So in this case, he must have paid the entire amount for invoice number 104. So how do we do that? We're going to go to our customers list to check out Great Restaurants invoice number 104. They owe me a grand total of $556.05, and they made a payment before July 2nd, right? Today's only the 28th, so that means we have to give Mr. Great Restaurant a discount because that's what it says here. He made a payment before the discount due date, which is July 2nd. So in this case, we have to administer this 1% discount to be applied to his invoice number 104. Now, let's take a look at this, right? What do we know to be true that's included in this price here, right? $556.05. This includes $30 worth of delivery charges. So in this case, we cannot discount this entire amount because we charged him delivery charges. So in this case, you can't discount that, right? It's a cost of being able to get the inventory to their store, right? It's a separate cost that they have to incur. So in this case, right, we can only discount for the total amount of sales. Now in this case, right, it's simple here. We know this includes the $30 delivery fee. So we just simply subtract that $30 delivery fee. And this is going to be considered a sales discount. So we need to figure out what $556.05 minus 30 is, which gives us 52605, right? Let's double confirm that. Okay, gives you 52605. 52605. Okay? Now, in this case, that is without the discount, or I'm sorry, without the delivery fee. So in this case, we have to calculate what 1% of this amount is. So in this case, equal round. What is 52605 times 0.1, right? You get the 1% discount. That means it is a grand total of $5.26 discount. Okay? I don't know why it's negative. This should just be 526. Right? So that's 526 for the discount. So how much did we receive from Great Restaurant, right? Because we're assuming that he must have also calculated the discount ahead of time. So in this case, he should have paid a total of $550.79 to give you that total of $556.05. Making sure that the next one that he owes is the invoice number 108. Okay, for the total of $585.87. So in this case, this holds true. So we know, in this case, we can go ahead and just fill out the subsidiary ledger just because we have all the information that we know here, right? We know that we received the check 4512, okay? So in this case, I can say today is the 28th. We received payment, check number 4512. It was for invoice number 104, okay? All right. So I finished with the subsidiary ledger, so at least I know this. I must record the sales discount for $5.26, and I must record that they made a payment for $550.79. And this is an accounts receivable. We issued them an invoice, so they owe me money. So therefore, for them paying me back, they are going to be reducing the accounts receivable. Okay? So let's take a look here in our journal. Okay? We're going to record it like this. Since we haven't done one, it's the 28th. We received cash, or we received a check, okay, for the $550.79. Okay, so that was the check for the $550.79. Okay, we received a sales discount because that they paid within the discount due date. So therefore, they get to receive a sales discount. Okay? This isn't a condition where it's an allowance or return because they're not returning the product. They're making a payment, and because we offer them terms to take advantage of a 1% discount, therefore, this is a sales discount. Okay? So sales discount is account number 46,000. And we know this sales discount was for a total of $5.26. Okay? Right? Our sales discount was $5.26. So therefore, because they're making a payment to what they owe, we are going to be reducing the accounts receivable because they paid for what they owed. Okay? And that should give you a grand total of the original invoice amount of $556.05. Okay? So, excellent. So we have everything that we need to know, right? We know that this was from Great Restaurant, right? And we know that we received that they were making a payment for invoice number 104, and they received a 1% discount, okay? And they paid with a check number 4512. Okay? So let's first do one thing at a time. We received a check for $550.79. So I'm going to put that in my deposits. Okay? Who is this from? Great Restaurant. Okay? For the 55079. Okay? All right. And let's see. We need to now go to the ledger because the subsidiary ledger is done, right? We already recorded that we recorded the payment that we have done. So we need to finish off our ledger. Okay? So in this case, I got to go to my checking account because I received a check. Received payment, check number 4512, still on page 18 of our journal, for $550.79. So that should definitely increase your checking account to $6,383.95. Right? We also ended up, we need to record our sales discount, right, which is a revenue, to contra a revenue account. So let's see, right here is the delivery income. Here you go, sales discount, right? So in this case, I'm going to make a note here. It's the 28th. And we received 1% discount on invoice number 104. Okay? For that grand total of the $5.26. So therefore, this should increase your sales discount to be $18.84.85. Okay? And last but not least, we need to actually decrease our accounts receivable, okay, because we have a payment for the 28th. So again, receive payment, invoice number 104, check number 4512. And because that's going to decrease my total amount that Great Restaurant owes me by $556.05. Okay? So that should decrease your accounts receivable significantly by a total of $2,004.37. Okay. Right? And I already updated my ledger, right? I already updated their account, so they show me that they don't owe me for invoice number 104 anymore. They owe me for just strictly invoice number 108. Okay? Okay, that should be everything. So let's see what has happened next. Okay? Next, we end up submitting another order for Super A Market, and they want another 65 pounds of regular coffee and 50 pounds of Supreme coffee with an additional 18 coffee mugs. Okay, this is Super A Market, which we're going to do this as sales order number 110. So all I have to do is update my sales orders for the invoice number 110. So it is 628, invoice 110, or sorry, sales order 110 to Super A Market. Okay. What are they going to buy from us? Okay. Right, they want everything on here. They want regular coffee, Supreme coffee, and some ceramic coffee mugs. So in this case, they wanted 65 pounds of regular, 50 pounds of Supreme, and 18 ceramic coffee mugs, plus a delivery charge. So if I calculate these amounts here, it should give me a grand total of $533.17, which is correct. It matches your scenario here, so good. That is something that we're going to be delivering. Okay. And I guess we reach the end of the day's final sales. So in this case, sales for the rest of the day is going to be this is what we sold for the 28th. In this case, there's no way that we're going to have enough space right here. But that is a huge gap for a possibility of someone putting in a transaction for themselves. So let's draw that line so we can prevent anyone from putting in any other extra information in here. Okay? Now we're going to start on page 19 of our journal for our daily sales. So we just recently did a daily sales right here. So I'm going to copy and paste this into the next in the next general journal page here. Okay? And this is for the 28th of June. Okay? So I'm going to put in my formula here so I can test my total debits to equal my total credits here. Okay. Okay, so right now we sold a total of, for the medium regular coffees, we sold 240 cups at $477.60. Okay. We also sold the large regular coffee 200 cups for $598 even. Okay. We sold the medium supreme cups 245 cups for a total of $610.05. And we end up selling our large supreme coffee for 201 cups for a total of $701.49. We also sold 5 ceramic coffee mugs for $34.95, and we collected tax to be a total of $199.82, giving me a grand total of $2621.91. Good. So that matches my scenario. It matches my journal, which I tested the accounting equation. I tested the debits and credits here to make sure that there's no typos. Okay. So now that I got that done, right, the first thing I'm going to do is I'm going to go ahead and make my deposit for the end of the day for that $2621.91. Okay. So again, today's the 28th, and this is going to be my 13th deposit for the grand total, right? Because we collected a receipt, or we collected a check for $550.79. So that's going to give me a grand total of $3,172.70 that I'm making a deposit for. Okay. All right. Okay. So let's see what is next. So now that I finished my journal, right, I deposited the money, so now I need to update my ledgers. Okay, starting with my checking account. Right, I got some in-store sales. Okay, general journal, page 19, because we started a new page. I increased my checking account by $26.21.91. Okay, $26.21.91. And that should give me a grand total of $9,005.86 in my checking account. Okay. Let's see what's next. We have to record all of my sales. So revenues first. Okay. Starting with my sales for the medium regular cups. Okay. Okay, so I got the 28th, and how many cups did I sell of this? I sold a total of 240 cups. Okay, for a total of $4.77 and 60 cents. Okay, and that's going to give me a grand total ending balance to be $4,276.51. Okay. All right. I sold 200 of my large regular coffee for a grand total of $598 even. Okay. And that's going to increase your account balance by $5,262.40. Okay. I also, let's see, we sold a total of the medium supreme coffee. We sold a total of 245 cups. For a grand total of $610.05. Okay, which should bring your account balance to $5,438.16. Okay. We also sold a total of 201 cups of the large supreme coffee for a grand total cost of $701.49. And that will increase your account by $6,055.15. Okay. We also sold some ceramic coffee mugs. Okay. We sold a total of 5 cups for a grand total cost of $34.95. Okay, so that should definitely bring your account balance to a total of $15.43 and 30 cents. Okay. And then, last but not least, we have to collect our sales tax. Okay, all right. For in-store sales, for $199.82, which gives me a grand total sales tax to be $1636.59. Okay. So there you go. We did the journal, we did the ledger. So now, last thing we gotta do is update my inventory. So in this case, how many pounds of each coffee did I use? I ended up using 40.5 pounds of my regular coffee and 41 pounds of your supreme coffee. So in this case, 40.5 of regular, 41 of supreme. Okay. So it is the 28, 40.5 pounds, right, of the regular. Okay. And my average cost right now is going to be the $163,604. And that should give you a grand total cost of $66.26. Okay. So therefore, well, I end up using 40.5 pounds. So that should give me a grand total of 55.5 left remaining, at a grand total of $90.80. Okay? $90.80 left remaining. Okay? So my average cost per item did not change significantly. It's still the same at $163,604. Okay? And I end up using a total of $66.26 worth of regular coffee. Okay? Supreme coffee. We have a grand total of 41 pounds that we used. Okay. So in this case, we have another split that we have to do because I only have 16 units remaining. But at least I know this. If I'm going to get rid of this entire batch, it's going to be equivalent to $29.05. So I know that without having to calculate that. So in this case, I have 16 pounds left, and I need to get to 41. So that means I need to take out 25 pounds from the next batch of inventory. Okay. So that means it's going to be a calculation. Okay. We need to figure out what these amounts are and combining. So for instance, right, 16 times that $1.81, right? Because this is not the new cost per item. It's this $1.81, which gives me again $29.05. I already know that. So in this case, that means I can go ahead and get rid of this. This inventory is gone. Okay. So that means I only have 125 pounds left, and I need to get rid of 25 pounds. So in this case, 25 pounds. That means since I only have one batch of inventory left, it's going to cost me $1.89, which I pulled down my formula, so it automatically calculated for me that was going to cost me $47.25. Okay, so I can go ahead and get rid of these inventory. Okay, so 236.25 is this one. Okay. And so I got rid of 25 pounds, so I should have 100 pounds left, which will give you $189, okay, which should be true, right? You got rid of $47.25, okay, which should reduce you to this amount. So 236.25 minus 47.25 should give you 189. Give you 189. So there you go. 189 is your total left remaining in your Supreme coffee. Right? So there you go. Right? You have a grand total of $76.30 total cost for using 41 pounds of coffee. 41 pounds of Supreme coffee. Okay? $76.30. Oh. So I'm going to go to my journal, and $76.30 is for my Supreme coffee, and for my regular coffee, for my regular coffee, we used a total of $66.26. $66.26. Okay. So now I need to update my ledgers to get the numbers I need for this, right? So starting with my cost of goods sold, right? For my cost of goods sold for my regular coffee, I used 40.5 pounds. Okay, which cost me $66.26. So that should give me a total cost of $1,127.26. I also end up using 41 pounds of my Supreme coffee, which gave me a total of $76.30. And that is going to increase my account by $11.92.56. Okay. So let's go ahead and update my ledger or my inventory accounts just so then I can confirm that my inventory worksheet is correct. So here's my regular coffee. We used 40.5 pounds. Okay. And that cost me $66.26. So that should have decreased my account down to 90.80, which, yes, that is true. Okay. And of course, I also need to update my account for Supreme Coffee because I used 41 pounds. Okay. And that gave me a total cost of $76.30. So that should have dropped me down to 189, which for sure we already confirmed, right? Because we have 100 pounds left at $1.89. So that gives you 189. Okay. Awesome. Okay. So that is the in-store sales for week 4 for the last day. Okay. So not only is it the very last day, it's Friday, and what do we know Friday to be? It is finally paycheck day. So in this case, we need to pay our employee, Irene, and we need to pay our sales rep, Albert, for their hard work. Okay, so here is Irene's W-4 form, right? You have Irene Jameson, okay? She submitted her address. She submitted that she is a single woman, so she's not married. And again, her form is pretty straightforward. She has 0 withholdings, 0 she claims nobody. Okay? So in this case, right, any extra income she's earned? No, because this is her primary job. Any extra withholdings? No. And any other dependents? No. She doesn't claim anybody. Okay? So that means let's take a look at her timesheet. All right? So she's worked. Okay, so again, we started the payroll period to be on Monday, June 10, right? And we hired her on the 11th or 12th, and she was expected to work starting on Friday the 14th. So in this case, she clocked in her first shift of 8 hours on Friday the 14th. Okay, so she clocked her first 8 hours. She is working from Fridays to Tuesdays, right? Because she gets to take her break on, or her weekend is going to be Wednesdays and Thursdays. So in this case, she worked Friday, Saturday, Sunday, and she also worked the following week on Monday and Tuesday. Okay, and of course, the payroll period ended on Sunday the 23rd. So therefore, she ended up working that Friday, Saturday, and Sunday. So in this case, how many hours in grand total did she work? Well, she worked 24 hours the first week and a total of 40 hours on the second week. So that means she earned a total of, for this payroll period, 64 hours. Okay? So let's go ahead and calculate what is going to be her total paycheck after we've calculated all the taxes that she's subject to have to pay. So in this case, we are now moving into payroll. All right? Where can we find the payroll? Well, I made it easy for you. I made a table, okay, right here in the employee section, right, that allows you to help you record what you need to record for all the federal taxes that you need to take out from her paycheck, and so on and so forth. Okay. So in this case, let's take a look. Irene Jameson, right, when we hired her, we said her pay date is going to be June 28, which is today. She earns $12.50 per hour. So here she earned a total of 64 hours. That means her total gross pay is going to be an even $800. Okay? So if she's going to be subject for her gross pay to be $800, let's go ahead and see what federal taxes she is subject to. Her marital status, right, on her W-4 form, she said she was single. Okay? Total withholdings, 0, right? She didn't claim any extra withholdings. So therefore, withholdings amount is going to be $0 because she didn't claim any withholdings. Okay? Now, again, the adjusted amount, again, is going to be her gross minus her withholdings amount, which in this case, she's subject her whole entire paycheck of her gross earnings since she didn't claim any withholdings, or she doesn't earn extra money. So in this case, her whole entire paycheck of $800 is subject to be taxed. So now this is where we figured out what her gross pay was. We figured out what her adjusted after calculating any extra income minus any extra withholdings. So in this case, $800 is her adjusted amount that is subject to be taxable. Okay? So let's see how much money what percentage she's going to be taxed at by looking at the circular E-table. So here you go. I provided the circular E-table for you. So she's earned $800. Okay? So in this case, she's definitely earned more than $526, but definitely less than $1,689 because she earned a total $800. So therefore, this is the row we are going to be using. Okay? So therefore, let's see what she is subject to. She gets to be taken $38 from tax regardless of what amount that she earns. Okay, that means this is the government's going to take $38 automatically. Okay, she is subject to a 12% tax on the total amount in excess that she's earned. Okay, and therefore the government also lets her keep $526. So that means anything extra after the $526 is going to be subject to a 12% tax. So let's see. That means she gets to keep $526, right? So let's calculate how much money over she would be, okay, if she gets to keep $526. So let's see. We can calculate it right here, right? The amount over is going to be $800 minus that $526. She's earned $274 over. So that means she's going to get taxed by that 12%. So that's why we got to calculate this, right? What is 12% of the amount that she has earned over? In this case, she's earned, right, you're going to do 12% of the $274 because it's based on the amount she earned over, right, over the $526 that the government lets you keep without getting taxed. So that means 12% of the $274 gives you a grand total of $32.88. Okay? We also have to include the amount to withhold from her paycheck, which is going to be what the government is going to take away from the paycheck regardless of the amount that she earns. So in this case, in the circular e-table, they're going to take away $38. Okay? So therefore, that's how much to amount to withhold is $38. So her total federal income tax withholdings is going to be $32.88 plus the $38. She is subject to $70.88 worth of federal income tax. Okay? Now, of course, because she didn't claim any children, that means no more extra things to be withheld from her paycheck. So in this case, she has to pay $70.88 to her federal income tax withholdings. Okay? Now let's talk about what other taxes that she is also subject to have to pay, because in this case, that was just federal income tax withholdings. So in this case, her gross pay was $800. Her federal income tax withholdings, which we just calculate to be $70.88. OASTI, also known as Social Security, is 6.2% of gross pay. So in this case, I'm going to calculate it. 800 times 0.062, right, 6.2%, is going to give me $49.60 worth of Social Security. Okay, so that means that's going to be taken out from her paycheck. Okay. We also have to calculate how much Medicare is going to be taken out from her paycheck, which is going to be based off of gross pay, which is 1.45% of gross pay. So that means she's subject to $11.60 that she has to pay into her Medicare. So net pay is going to be her gross pay minus federal income tax, minus Social Security, minus Medicare. She's looking at walking away with $667.92. Okay? So in this case, we got to cut her a check. Okay? Now that is her earnings. So her check amount is going to be for the $667.92. So we need to cut her a check in the journal. So let's record our journal. Okay? So we just calculated, right, her total paycheck. In this case, right, which account are we going to be using to represent that we are making a payment to her, right? In this case, how do we pay her? we're paying her as a wage rate, right? So in this case, that's an expense to the company, right? Because you got to pay your employees for their work. So let's see, okay? We have payroll expenses. First account under there is going to be the salaries and wages expense account for 6810. That is what is going to be calculated as her gross earnings. Okay? 6810. Okay? All right, and she's earned a grand total of $800, right? Let's see. The federal taxes that we have to collect from her is FITW, Social Security, and Medicare. So let's take a look at this. We're collecting, but these are payments that we have to make for the government, right? We're collecting it from our employee to pay the government. Now, in this case, are we making a payment to the government now? No. We're going to collect it as a liability. So let's take a look at payroll liabilities. Okay, so here are the payroll liabilities. We got a salaries and wages payable. No. Commissions payable. No. Employee FITW payable. Yes. Employee Social Security payable. Yes. Employee Medicare payable. Yes. Okay. So these are the three things that we're going to be plugging in. It's going to be employees' federal taxes. So 2430, 2440, and 2450. Okay. And because they're liabilities, right, we're collecting it from the employee's paycheck to essentially pay the government. Employee FITW payable. Okay. Count number 2440, 2450, 2460. Okay. Wait, actually I think it was 2430. Let's double check my chart of accounts. Employee FITW is 2430. Okay. So we got the employee FITW payable, right? We got the employee Social Security payable, and we have employee Medicare. Okay. And last but not least, we also have to issue her check. Okay. So we're going to be writing her a check. Okay. So we're going to be issuing her a check for her hard work. So in this case, we have a total of $70.88 worth of FITW. We got $49.60 worth of Social Security and $11.60 for Medicare. And last but not least, what was her check amount? $676.92. So, overall, how much in grand total are all of these going to equal to? Right? It should equal all to her gross pay, right? Because at the end of the day, her gross pay was $800, right? We have to take away $70 for her FITW. We have to take away Social Security for her Social Security, and we also had to take away a portion of the money for her Medicare to equal up her paycheck to be $667.92. So at the end of the day, they do match your debits and credits, right? Because at the end of the day, this is how much she earned. These are the the federal taxes that she's subject to pay for. So that's how much money she's going to be walking away with. And because we have to cut her a check number 1529 for a total of $667.92. And who is this check going to be written out to? Irene Jameson. Okay? And what is this for? Paycheck. Okay? So you cut her a check for $15.29. So there you go, PR, right? Where did we record this? In our Journal 19 for the check number $15.29 for the $667. So now we can go back to our journal and complete our transaction and say, well, we paid Irene Jameson, okay, paycheck number 1529, okay, for her hard work, okay. So that is just her section of the payroll, okay. So that's just only one aspect, right? We still haven't talked about the second aspect, which is the company taxes, right? Because we have to pay taxes for having Irene as an employee, right? But before that, I think we should just go ahead and put in our numbers into our ledgers because we're just going to deal with one transaction at a time. So this is just the employee standpoint in regards to the payroll process, right? So let's go ahead and update our ledgers because we end up cutting a check and spending money. So first things first is we need to address that she earned money from us, right? She incurred an expense, right? So first thing we're going to do is we have a payroll here for salaries and wages expense. So in this case, we know this is Irene, okay? And we know that she's worked 64 hours, okay? At $12.50, so that's okay. You don't have to be that descriptive, but we know that that Irene has earned her salaries and wages, okay? And post reference, once again, we did this in General Journal, page 19, for a total of $800, okay? All right, and now we need to distribute all the taxes, all the federal taxes that she's subject to have to pay into through her liabilities. So now we're going to finally tap into the payroll liabilities section of the liabilities, okay? So again, first one we're tapping into is going to be employee FITW, okay? Which in this case, right, this is for Irene. Okay. We're on Journal 19. And she's racked up a total of $70.88 worth of federal income tax withholdings. Okay. She's also claimed, right, a total of $49.60 to her Social Security. Okay, so $49.60 to her Social Security. And she's also claimed a total of $11, okay, for her Medicare. Okay, $11.60 were to her Medicare. And last but not least, right, we also have to distribute her paycheck. So in this case, we're going to update our checking account. Okay, because we issued her a paycheck. Okay. Paycheck number 1529 for a total of $667.92. So that will definitely decrease your checking account by down to $8,337.94. And that is just issuing out her paycheck. Okay? So once again, we already did this subsidiary ledger, right? We entered in and calculated our amount for Irene, right? But that was just the employee section of the payroll process. We are also subject to taxes that the employer or the company is also responsible for having employees. So in this case, right, if we continue scrolling down below, we need to figure out what the company taxes are. So in this case, gross pay was the $800, right? Her OASDI, which is her Social Security, was a total of $49.60, right? We've already calculated that. Her Medicare is going to be $11.60, right? Because the company is responsible to also match the employee's portion of the FICA, which is the Federal Insurance Contribution Act. Okay, so there you go. We already calculated from the previous one for her personal FICA. Now we're looking at the company's responsibility to match her for every dollar that she puts in her Social Security. The company must match her. Okay. And FUTA, right? In this class we learned is going to be 6% that you must pay into federal unemployment. Okay. So in this case, this is a based off of gross earnings. So 6% of $800 is going to give you $48. Okay. And let's see here. The state unemployment tax is going to be 3%. Okay? And it's going to be 3% of gross pay. Okay? So 0.3, okay, which is going to give you $24. And then we talk about workers' compensation. So workers' compensation is a means for us to protect ourselves in case Irene does get injured on the job. Okay, so how do we calculate that? It's going to be 1.336% of gross pay. Okay. Okay, which is going to give you $10.88. So let's calculate our grand total payroll liabilities that the company is responsible for. In this case, we have to pay an additional extra $144.08 for having Irene as an employee. Okay? And of course, because we dealt with the company's standpoint, right? That is exactly what we're going to be journalizing. Is we're going to go through the company's standpoint. So we got to go through company FICA payable, company FUTA payable, company SUTA payable, and workers' compensation payable. Okay, workers' comp payable. And this is an expense because this is the amount that we have to spend to pay for having Irene as an employee. So this is going to be considered a payroll tax expense. Okay, that is the total amount that is going to be that we have to pay as a company for Irene. Okay, so payroll tax expense, which is going to be $68.30. Okay, and this is for the 28. Payroll tax expense. $68.30. Okay, and then we gotta list all of those company taxes. So company FICA, company FUTA, company SUTA, company or workers' compensation. Okay, so all liabilities are up here. Okay, so let's see. We're gonna start with account number 2460 is where we start. Okay, 2460, 2470, 2480, 2490. Okay. So let's list them all. Company FICA payable. Okay. We got company FUTA. We have company SUTA. And we have workers' compensation. Okay. So 2460, 2470, 2480, and last but not least 2490. And now we need to calculate all of the amounts that we calculated here in our the employees section of the subsidiary ledger. So in this case, FICA, which is going to be a combination of Social Security and Medicare. So in this case, company FICA is going to consist of the $49.60 for Social Security, and it's also going to include the $11.60 for the Medicare, right? That's the FICA, is the Social Security and Medicare. We are also going to include, let me see, the FUTA was $48, SUTA was $24, and the workers' compensation was $10.88. Okay, so therefore, grand total payroll taxes is going to be equal to $144.08, which is exactly what we solved on this worksheet here. Okay. So now we can update our accounts. Okay, make sure this is payroll taxes for Irene. Okay. So let's go ahead and update our ledgers accordingly to reflect all of this. Starting with our payroll tax expenses, right? This is for Irene, and she gathered up a total of $144.08. Okay. And now we have to split that amongst all the federal and state taxes that the company is subject to have to pay. So starting with the first one, which is company FICA, Irene, which came out a total of $61.20. Oh, on the credit side, $61.20. Okay. We also have company FUTA, right? The federal unemployment based on Irene, which gave us $48. Okay. And our company SUTA, state unemployment, which is based on Irene, gave us a grand total of $24. And last but not least, worker compensation was $10.88. Okay. And that is all we have to do for calculating Irene's paycheck and her taxes that she has to do, and the company's responsibility for paying into those same taxes for having Irene. Okay. All right. Last but not least, let's take a look what happened next. We still have to pay for Allen's commissions, right? And then we are done with Coffee Cafe. So in this case, we're going to issue him a check, okay, for the commissions expense. Oh, and guess what? The owner also decided to pay himself as well for $1,500. So let's first go ahead and take a look at Albert Allen's. So right now, what was the total amount of sales? What was the total amount of commissions? And what is the total amount that he's going to get? So in this case, the commissions is going to be 40%. Okay. Now, how much was his total sales? We would have to go to his commissions worksheet. Okay. So in this case, we said we're going to pay where the payroll period ended on the 23rd of June. So he gathered a grand total of all of these sales. Okay. So in this case, the total commissions that he's earned was a total of $560.66. So $560.66 was the total amount that we are subject to have to pay. Okay. So in this case, right, he's earned a total of $560.66. Okay. 560.66. Okay. Now in this case, because he's an independent contractor, right, we hired him as a sales representative. He solemnly earns his money based off of commissions, which is 40% of the total sales that he has sold, right? So in this case, he's earned 100% all of the earnings that he's earned, which is 40% of his total sales. So that got him a total of $560.66. In this case, that's exactly what you need to do. You only need to pay for his expense, which is going to be this amount right here. You do not have to pay any penny into his Social Security, Medicare, or any of those because he is not an actual W2 worker. Okay? He is not, you are not responsible to pay any federal taxes that are involved with Albert because he's an independent contractor. He's going to be responsible to pay the taxes on his own. So in this case, what journals, or in this case, what accounts am I going to be looking at? In this case, right, we're making a payment to him today. So let's see what those entail. So under payroll expenses, you got commissions expenses. Okay? You have commissions expenses. Okay? So that means that's what we're going to record is a commissions expense. Okay? Account number 6820. Okay? $68.20. Okay? So his total amount is going to be $560.66. Okay? And because we have to cut him a paycheck, right? That's going to come directly out from our checking account. Okay? And that is $10,100 for the same exact amount. So because we have to cut him a check, let's see what check number we're going to be issuing. All right, we're going to be issuing out check number 1530 for the $560.66 to Albert Allen. Okay? And what this is, commissions. Okay? So he's earned $560.66, and you wrote him check number 1530. So Albert Allen, commissions, check number 1530, right? And of course, it is going to be 40% of sales. Okay? And there you have it. Now, you need to update your ledgers to reflect that payment. Okay? So in this case, it was a commissions expense. Okay? Commissions expense for Albert, which is 40% sales. Okay? For a total of the $560.66. Okay? And of course, we end up cutting him a check. Okay? Commissions check number 1530 for that $560.66. So that decreases your checking account by $7,777.28. 7777.28. Okay? And then last but not least, what did we do? We also incurred a owner's withdrawal, right? Bob Mason, right, the owner of the company, decided to withdraw $1,500 from the bank. And how did he do that? We need to issue him an actual check itself. So in this case, you do have plenty of space for this actual transaction to actually occur right here on this last page here, that he did a owner's withdrawal. Okay? And how did he do that? Well, he took money from the checking account, so therefore, it's going to come out from the checking account. Okay? Now, checking is 10,100, and of course, owner's withdrawal is going to be, let's see, owner's withdrawal is account number 32,000. Okay? And how much did he withdraw? He withdrew $1,500. Okay? $1,500. Okay? So, because he withdrew $1,500, again, the proper way to do this is issuing him a business check to Bob Mason, and he's going to take that check and deposit it into his personal bank. That is the ultimate way to do it, just so then it doesn't look like Bob is just going into the bank, into his business bank, and just withdrawing the money, right? That could be considered a fraudulent charge, even though that money is his. The proper way to do this is, again, to cut him a business check and have him cash it out in his personal bank. Okay? So in this case, he wrote a check, right? $1,531 for $1,500 to the owner, Mr. Bob Mason. Okay? And what was this for? Owner's withdraw. Okay? So we wrote a check out $1,531. Okay? So that means I'm going to make a note here that we made a payment to Bob Mason. Okay? And this is a owner's withdrawal using check number 1531. Okay? So now, yes, you can draw a line almost anywhere here since it's the end of this transaction. I'm going to go ahead and just draw my my line here, so then no other transaction is going to be able to fall in here. Okay? And this is going to be where I begin my trial balance for week 4. Okay? So let's go ahead and update our ledgers, okay? Because we just had an owner's withdrawal. Okay? Owner's withdrawal. Okay? So ledger, this is part of equity. Okay? So owner's withdrawal right here. It's the 28. We have Bob, right, cutting himself a check, 1531. General Journal 19 for the $1,500. So in grand total, he's withdrawn $3,000 from his company. Okay? And of course, that comes out from the business checking account. Okay? So Bob withdraw check number 1531, okay, for that $1,500, and that will definitely decrease your checking account down to a total of $6,277.28. Okay? And I'm going to stop here for today, and we'll continue on next time with the trial balance.